Good morning, team. Happy weekend. Saturday members video. I will go over the market, some of my thoughts, and I have a few stocks to go over. Minor setups. There really isn't that much going on as far as good setups for from good quality merchandise. Everything is still going to be in the energy oil sector, and those have been pretty played out already. I think they're still going to be going higher, but we need them to set up and not take any early entries. So just wanted to start here real quick with our micro look here at our 15 minute for the last a couple weeks. We had this longer channel up here we always talk about with a 330 still at level. I remember we had back here a few days further another one that topped. So we had three, but as we're moving along, those bars are getting done away with. So we still have this top here. We have this top here. We're playing in this channel, and then we quickly went down another stair step lower, and we hit our head resistance here at the 315 level. That lasted basically a day and a half, and then we quickly went down 10 points to the 305 level. We hit our head here three times. We couldn't rally. We were in the 300 295 area for three and a half days, and then again, if you notice, everything has been stepping down lower. And then we hit here our resistance and support broke, and we went all the way down to 285. Those are those nasty days on Thursday and Wednesday. We started just going lower. We hit a head on 295. We came back lower. We tested, and then on Friday we gapped up. So this is what I'm afraid of, guys. Now there is this gap here that eventually at some point in our lifetime, this will get filled. Um, maybe not, but more likely than not, gaps most of the time get filled. If you notice this little gap here, from here to here, it got filled immediately. Remember, we still have a gap up here in the 350 range that hopefully eventually we can climb all the way up, in the next few months and fill it by the end of the year. But this little gap here, hopefully it'll just stay just void there forever, and we never see these levels again. We shall see. But now we're playing back in this channel, so we have a step up. Okay, so now maybe we draw this little trend line here. Um, if you want to look at it this way, and now we have this channel kind of going up. Maybe the next level. I mean, we need to break 305. We need to start playing in this arena here. If we break 305, it's a good indication that then we might kind of start settling in, and maybe we don't see this anymore, and then this was a true low. We don't know yet. We're not calling a low, but if we get an indication that we start playing in this arena here in the 305 to 315, and then eventually we start poking our head into this channel, then this could be a nice kind of look back at. Okay, this was our low. We don't know yet. Okay, we still have a lot of resistance on top here, but this is kind of like the micro level. Now we go back to the daily here. Technically, officially, this was day one of the rally. Even though it's a red bar, because it technically closed just below the previous day's close. It still closed on the higher part of the day. So it ended up on the whole bar. It ended up on the higher part, not the middle or the lower part. It didn't end up as a hammer like Friday. Friday's a hammer. I mean, that's really strong movement on decent volume. It wasn't really a lot of this day right here where we had this huge one on big volume, and then boom, we took off. So technically, let me clean this up. Technically, this is day one. So this is day two. Now we need minimum 3-4 days. So day four on, maybe day 4 through 7. So maybe we're looking at Wednesday or Thursday or Friday. We have our follow through day, and if we have a follow through day, that means 305 is taken out. That's what I was saying earlier on this level. Then 305 for sure gets taken out, and maybe even 310, and we're back in the 315 area here gets taken out. So if we do that, then this alert will go off. we get above the 9, and hopefully we get above the 21. If we get above the 21, which is this kind of level right here, we break above the 318 level, which is this low here. If we kind of break that, now we're playing in this arena here, then this could be a low, guys. This could be it. This could be our low, and then we're back on to, you know, we could meander around, but we're meandering around a frothy higher levels rather than, you know, we're scraping the bottom. We get one day a little rally, and then we go back lower. One day we go back lower. So we have work to do. We need to see a follow through day. Follow through day. The basic rules are, you have one strong update. Let me show you on the actual composite. On the composite, you see, we had the blue bar. So that's day 1, Thursday, Friday, day 2. We could do whatever we're gonna do on Monday. Hopefully Monday, like it has been before, a continuation on Friday. And in the last 5 weeks, it's been like Friday was a down day, Monday was a down day. And then we had a little turnaround Tuesday, and then boom, 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 boom. So hopefully this one is like, we have an update Friday, we have an update Monday, maybe turnaround Tuesday, we have a little settled down effect, but we don't take out these lows, and then we continue higher. So we basically cannot take this low out. If we take this low out, then the count resets. Like, for example, this was day 1, right? That was day 1, and this was day 2, day 3. We were waiting for day 4. Day 4 was the one that was going to be the follow-through day. What happened day 4? We took out this low, the count reset. So this is now day 1 again. So now we're here at day 1, day 2, again, 3, 4. It has to be day 4 on. So maybe like from day 4 to day 12. It's kind of like what, quote unquote, the rules say. So to get a follow through day. So sometime next week, if we get a higher close, like we get a nice big blue bar that's above the previous day, and obviously we never ever get below this number, that's our follow through day. We could start, you know, getting more, not aggressive, but we could start, you know, dipping our toes in the water with a little higher level of confidence than, you know, dipping our toe in the water, you know, at these levels or something like this. Because even this was a huge big update. What did that do for us? Nothing. Look at this. Look how, I mean, we went from 1,300 to almost 1,000. That's a, you know, 2,000 point move lower from early May to this end of this week. And again, we are like, okay, awesome, here we go, we're back, boom, 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 3 big days in a row, and then boom, we lost 2,000 points. So we cannot get too comfortable here. This is just day 1. Friday was awesome, 400 point move up. Day 2, but we still below the 9. Okay, we still below the 9. We still got to clear here. We clear here, and we got to clear these guys. Hopefully, I get up to the 21. Then if we do that, then that's probably going to be like that follow-through day scenario, where now we got to worry about the 50, you know, hitting our head at 13,000. I'm if I had to bet, it had a gun to my head and I had to bet, I'm pretty confident that when we get to 1,300, we're not gonna just go through it. I mean, look at here, boom, 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 psychological level, right here, right at 1,300. Right here, 1,300. Right here, 1,300. Once we broke it, then we get up. So I'm pretty sure once we get to 13,000, I'm not 1,300, sorry, 13,000. Once we get to 13,000, we're 11,085 right now on the NASDAQ composite. Once we get to 13,000, the 50 will be right there, right? Now, what do you think, guys? We got the 50 coming down to it. We got a psychological number of 13,000, and we're rallying down from almost 11,000, 2,000 point move back up again. You think we're going to go to 14,000 right away? No. We're going to hit our head. We're going to hit our head on it, and we're going to come down a little bit. Hopefully, it won't be a drop. But we can kind of, you know, meander, which is good. You know why it's good? Because now we're building a base. Now we're building a little tight base. If you build a little tight base, then we get the breakout. Okay? It's kind of like here. We're building a nice little tight base here. We got the breakout. We build this base here. You hit our head, you come back down. You hit our head, you come, and then you see here how I got tight. You see how I got tight, and then we never broke it. We broke down again. That's fine. So that means that was a technical analysis part of it. It never broke out through. It never broke out, so we never went long. You know. And then here we finally got out of it. We hit our head enough times that this last time we went through, we had a nice little couple 100 point moves. So you look for that tight action. the same thing as stocks. You know, we look for movement up. We look for it to come down again, go sideways for a little bit, and when it starts breaking out, that's your early entry right there. And then here, it's your add-on. Once you get here, you know, what does it do? It meanders a little bit. It comes back up to it again, and then it breaks through. That's your entry, and you take off. So same kind of concept. I'm pretty sure this is going to build a nice little base here. It's going to come up to 13,000. It's going to consolidate here for a little bit, and then we're going to take off. Okay? So, but again, we need to see that follow through day. And even if we do, it's going to be above 12,000. That's, I mean, again, that's still going to be an 800 to 900 point move. So that's going to be at least a couple days of good price action. We could make some money in those couple days. But again, very limited and taking profits on the way up. Okay? So, I mean, that's pretty much it. We've been in this sideways pattern we've been in this downward spiral for a while. So, you know, nothing has changed, guys. Okay? Same thing with the S&P. It's pink, but it's the same concept. Everything is looking the same thing on the S&P. You know, 4,500 is a 200. That's going to be a major resistance level. And then whatever this comes down to, we're going to somewhere maybe like 43,000, 4,300, something like that. It's another 300 point move. I see that as the follow through day. It's going to be above the 21. So we'll meander a little bit. The 50 is going to hit it. It's going to be the same concept. We got to break through these levels right here. For, you know, and then we got to break above the 200. So again, that's a lot of work to do. Okay, a lot of work to do. So just a few little stocks that I wanted to go over, just so you can see kind of setups. I'm not going to give you specific prices, entry points, because it's going to be more of an area than a specific trigger, because they're just kind of basing setting up right now. So you want to see that base set up to kind of go through and develop itself. Okay, so here we go. METC. METC. Okay, I want this little base right here to be taken out. We had a nice, almost a 14% move on Friday. Number one industry group. Look at the growth expected for this year. So again, this little base consolidation at 200 held. It's hitting its head on the 50. So I want the 50 to be cleared 100% for sure. And then this little consolidation area right here, this little thing right here, you know, like here we had a nice breakout. Let's see, you took it at 1750, you took it at 21. That's like a nice move. So I want like that 1750 area, 1740 to kind of clear. Once we do that, we can see another run at 20. That'll be a nice move on this one. But you got to see it develop first. COP, same kind of concept. I want this up here, this all consolidation. I want this to kind of like go sideways for a little bit. This is going to meander for a little bit, and then once it breaks this, then we take it. But we want to see it, okay? We want to see that breakout occur. WMB. Same kind of thing. We had this nice consolidation here. The 50 held nicely, so that will be your line in the sand. If we do take this little area here, we break this, we could, you know, we probably go to the 40 price range, because when we did it here, see this little consolidation here. We took it here, say at 35. We probably took this to like 37, 38, and then kind of broke down again. The market, you have to take profits. I mean, but this stock plays itself for nice pattern breakouts, because, like for example, you had this little downtrend line here. If you took it here, you had a nice move. Even if you took it at 29, you took it at 31. At 31 here, you took it here, you took it to, like, say 34, 30, 33. Then this little breakout here, you took it to 37, and so forth. So I'm waiting for this to kind of play out, to maybe retest these levels here, and if it does, we add if it breaks above this, and if it comes back inside, you have a stop loss, and you make a couple points on this. CTRA. Again, this little shelving right here, kind of from this 29 area, 29.50 to 31.50, around there. If it breaks this little shelf, we can maybe have a 33, 34, 35 kind of price target, and you have maybe your 21 as your line in the sand. The 50 held pretty good, so if you want to hold it a little longer, maybe the 50 will be your line in the sand. AR. I like AR. Remember we took it here? This little back trend line here. I had an alert. We took it right there. And if I would have held it, I would have had a nice gain. I got out right there. I got it right here when it had just above 30. So I had a nice. It was a nice trade, but again, it even let me clean this up. Even this little base right here was another nice little entry. Do you see this little shelf right here? You see? This is beautiful. You could have taken it here at 31, 32, taken it to 37. Came back down again. That would have been an entry right there, and you would have gotten stopped out immediately. Maybe you lost, 37, 38, 45 cents. And then it came back down again here to the 50. It held, it held, it held. Now it's going to probably go sideways for a little bit, just like it did here. If it goes sideways and it breaks this little shelf right here, then we take it again and we can have a run to 40 if the market is cooperating. It's got 99 relative strength rating. It's pretty good. Look at the earnings growth for the next couple of years. AR. I like those initials. WRB. WRB. Again, 50 is holding, so 50 is going to be your line in the sand. I like, it showed to self that, patterns do work here. You see the shelf, you took it to 70. Okay? You see the shelf right here, 58, you took it to 62, and so forth. So this is probably going to develop this way, where it's going to go sideways, and then kind of break this little, a nice little shelf. So I have a little early entry. Let me clean this up. I have a little early entry on this downward channel here. So if it kind of breaks, this maybe Wednesday's high, it's a nice little early entry. Take it to 70, you get a couple points there. Take maybe a 1/4% profit. If it doesn't stop you out at 68 or so, or break even, or a little bit higher than break even, then you add to it. If it breaks 71.53, I maybe go to 80. Good numbers. Lilly. I made some good money on this one. Could have made a little more, but again, holding the 50 real nice. I took this trade right here. I had this downward trend line. I took it right there. I took about a 7 or 8 point move on that. Again, it's a big ticket stock, so you buy less shares, but same concept, the same percentage move. So I like this little shelf right here. That was a good entry right there. You see that? So this 295 area, it's a nice little shelf. So maybe an early entry is 296 around there, and then an add-on above 300. Okay. Again, maybe the 50 will be your stop out. And then the last one is GPC. GPC. Again, nice. This nice little cup. You see, there's a cup. This would have been another early entry here. On this little handle base setting up here, you would have taken it here from 131 to maybe 135 or so, and then it's consolidating again. It came back inside again. So you have this little shelf here that's kind of building sideways here. So once it breaks there, you can maybe take it to 140, maybe at 136, 135.70 something, and take it to 140. Take some profits at 140. Put a stop, above your entry price, so you have a guaranteed winner. And if it breaks to 140, maybe you add, and then this back here is irrelevant. It's too far back, and it's not gonna really have a lot of resistance on this number. But you want to break this 141, 142 range, and then maybe you could take it to 150. But the initial one is above this little shelf right here. Okay, and again, you're coming up above the 50. You're coming above the 200. It's kind of building up. Look at the relative strength line. Even though the stock was going side, look at this, guys. This is good. Good thing here. Even though the stock was going sideways to down from here, really hasn't done anything. It went from 124 to 141. That's a great move. Look at the relative strength line. This relative strength line, it's not an RSI. Okay, it's not a oversold or overbought indicator. The RSI, it's an indicator. It's something else. I don't use that. The relative strength line is proprietary to MarketSmith. Okay, it's proprietary to MarketSmith. What they do is they rate the relative strength of each individual stock compared to the market. So this stock was outperforming the market relatively dramatically higher than other stocks. So it's doing better than 89% of other stocks right now. That's why my scans only picks up the winners, not the losers. And it's not the stocks that are going this way. And look at the numbers. I mean, look at these numbers. Okay, so top 40 industry group. So again, I'm always going to be picking up. I'm always going to be picking up on my scans the best of the best. So we're never going to have to worry about like, oh, well, now tech is hot. We're still in oil. No, we're not. We're going to be picking up tech. If tech is going to be rolling into, a scenario where it. I mean, look at Nvidia. I mean, you want to be buying Nvidia right here? I don't. I did, and I got and I got stopped out, and I lost a little bit of money because it's just not. I mean, I still have. I mean, I had like 1,200 shares. I only have 400 left because I've been studying covered calls. So I've been trying to get my cost basis down. I'm barely breaking even right now with what I got left. But again, this is not going to come up in my scans. Why? Because it's like a 136 out of 197 industry group. Relative strength, 45. Look at the relative strength here, and look at the relative strength here. Right? So this is what we look for. Okay, we buy stocks that are going this way, and they're stronger than the market. So that means they have alpha, and they are performing. So it's building a shelf here with higher relative strength rating. If it does break, it will give it a push. All right, guys? So put the work in, stay engaged in the market. Friday and Thursday were just 2 days. We're not concerned about missing anything, okay? The market's going to, if the market's going to take off, we're going to have plenty of opportunities, okay? If you were worried about missing 1 day, 1 or 2 days here, oh my God, this big huge, I missed it. Okay, it doesn't matter. You kind of went from 133 to 140 something here. So I'm just referring to this particular stock, but what I'm saying is the whole point of like, thinking of you're missing out on something, fear, FOMO. Don't have that, okay? If the market's going to go up, it won't go out. It won't go up without us. I will keep us in the right side of the market. Right now, we're gonna tip a toe in the water if we have a follow-through day. We want to see a follow-through day. If we do that, then we can start taking a little bit more aggressive action. And if we get stopped out, well, that's the market telling us, okay, it's not ready yet. It's not ready yet. Maybe the follow, like back here, this follow-through day didn't work. Here we go. That was day 1, right? 2, 3, 4, right here. So you start dipping your toe in the water. Okay, you had this little rally. Awesome. You made some money. Boom. Okay, so I'm not saying we're gonna do this and then boom, but we have to see it. Once it took out this low right here, then obviously we reset, and then we went below the 50 and so forth. So like you want to see, first of all, okay. I mean, again, we're so elementary right now as far as what we need to get accomplished that you can see this. We are trending lower. We haven't even gotten above the 9 EMA. I mean, the 9 period moving average, we haven't gotten above it. So let's just get above that first, okay? Before we start, jumping for joy. Let's get above the 9, okay? Once we get above the 9, okay, might be a little change in character. Here, see? We were trending the 9, we got above the 9, okay, changing character. Then the 21, we got to get above the 21. Okay, changing character, awesome. We got a nice little rally there. Boom, above the 50. Wow, we're back. Let's go. 200, big boy. Boom, down. So it's a lot of work. Okay, let's not get too happy here. It's a lot of work. Again, this is gonna take months, guys. This is before we even get anywhere up here. It's going to take months. Okay, we broke it here. Listen, we broke January 20th. Let's say we broke the 200 here. We did not get back to it until March. So 2 months to get back to it. Okay, to get back to it. We never broke it again. We just got back to it. That's all it was. And then from April 1st to May, let's say May 1st, even right here. So in a month, it took okay, look, it took 2 months to touch it again. It took 1 month to destroy it again. So the market goes down a lot faster than it goes up. So for us to go back up again, let me clean this up. For us to go back up again, it's not going to be like this. It's going to be like this. Months. And then maybe we start going higher trending higher, and then we get a nice little channel where we kind of do this, you know. So now we're trending higher, like here. See, you're gonna have little waves down, you know. Here you go. I mean, this is a perfect example right there, right there. And then what happens here when this channel gets broken? See, this high is much lower than this high, right? What happens when you break this channel? Now we got this channel. It's very simple. If you just look at this, if you just look at this, okay. Now you're looking at this. I mean, we're even below that particular channel. Okay, if you just look at that, we're not gonna get up here. We're not gonna get up here in a month. I guarantee you, we're not gonna get up there in a month. This is gonna be 3 to 5, 6 month process to even get back to the 200. Okay, just keep that in mind. Keep that in perspective. It's gonna be a 3 to 6 month process to get back to this level here. This is gonna meander. We're gonna hit our head in the. We're gonna hit our head into resistance for sure here, for sure, and then we're gonna come back down again. We're gonna test it. We're gonna go sideways. Then if we break it, then we break the 50. Awesome. Then again, this is gonna be going down a little bit, so it might be a little bit. It might be at lower levels. Okay, we're not gonna get back to this level. If we break the 200, we're gonna break the 200 at a lower level because the more the more time this passes, the more this line keeps going lower. So once we break it, we're gonna break it at lower levels. So to get back to this level, to even break 15,000, that's 3,000 points away. Okay, that's gonna take months. Keep that in mind. So that means that what I'm trying to get to the point is that if we get a rally, if we get breakouts, we get setups, and we get price action that's good, we take it. We take it, right? So small positions, but we take it. But what do? We take profits into strength. We take quick profits. We don't let it run back down again and stop us out, and we have like nothing to show for it. You want to make 5, 6, 7, 10%, and then even 5, 6% will be fine, and have a 3%, 2% stop loss. You still keep your ratios a minimum 2 to 1, hopefully 3 to 1. Okay. You have to know your math. You have to keep your numbers. You have to know what your average gain is and what your average loss is. You want to average between 5% will be like max, 7 will be like dreadfully you're done, stop losses. You want to keep between 3 and 5%. You want to keep your losses between 3 and 5%. You want to keep your winners between 7 and 12%. Ideally, you want to get 15 and 20%, and you want to keep your losses at between 2, 3.5, 4.5% around there, and have your winners at 8, 9, 10, 12%. That's what ideal. This market's not giving you 10, 12, 15% gain, so you want to take it at 7 or 8%. That'd be great. 5, 6, 7%. That'd be great. That means you got to keep your stops at what? 2 or 3%, because you have to keep the 2 to 1. You have to. There is no like leeway on that, guys. You have to have your 2 to 1 minimum. Ideally, you want to go 3 to 1, 5 to 1, but you want to have that 2 to 1 minimum. If you don't have a 2 to 1, you should not be trading. If you don't have a 2 to 1, you should not be trading. If you don't have a 2 to 1, you should not be trading. Okay? So I'm serious about this. This is your money. This is your money. Protect it. You have to have your stops set up according to the technical pattern, and make sure that when you have a breakout, you have enough overhead, fly area that is going to give you double what you could possibly lose on a stop out. It's just that simple. If you don't have it, don't take the trade. Don't take the trade. If when you look at it, your upside is going to hit resistance at 5%, and then your stop loss, it's like 3.5%. That's not good. You don't want to take that trade. There's no edge. There's no long-term sustainable growth with a 1.5, or even a 1 ratio. You don't want a 1-to-1. You want a 2-to-1 minimum. Okay, so I'm repeating it a million times because it is so important. The numbers are so important. You have to know your numbers. You have to know your ratios and maintain that. So let the math dictate your trade. Okay, if you look at an entry, like for example, this one, COP, like I gave it to you guys earlier, COP, right? So let's say you want to take an entry, an early entry right here at 105. Let's say you want to take it at 105. Okay, you know that at 107.50 around here, 108, you might get some resistance because it hit his head here and it hit his head here and it came back down again. So if you take it at 105 and you have a 108 potential, 107 and a half potential resistance area, that means 2.5 points, right? So what's your stop going to be? Your stop is got to be like $1. $1. So that means if you take it at 105, you're going to stop out at 104. That's too tight. You're choking the trade. So it's not a good trade to take. Now, if I'm taking it at 105.50, right? I have nothing up here. I have nothing up here. So this you again, more advanced trading, you can do a Fibonacci extension and you might get up here somewhere like let's say 115 or so, 120 maybe. Let's say 115. You have a 7-point move. So if you take it at 105, 104 is my stop, right? Because now technically 104 is kind of this little area here where it hit his head. So if he comes back inside 104, that means the trade didn't work, right? So 104 is my stop. 115 is my trade. I'm taking it at 107.50. I got 6.5 points here. Let's say 7 points, and I have 3 points here on my stop loss. What is that, guys? 2 to 1. That's how you trade. That's how you figure out your entry. Well, first of all, you got to figure out your entry. Your entry is here. You're not going to be entering at 102. I wouldn't ever do that. 104 would be the earliest, but I told you got resistance. So 107. That's why I put it up here. I didn't want to put it here. So you got to figure out your entry. Then you got to figure out your stop loss. Okay, my stop loss is X. In this case, my stop loss will be 3 points. I take it at 107.50. I stop out at 103.88. So I have a $3.5 stop loss. Okay, so what's my potential gain here? I mean, this stock could easily go to 115 based on there's nobody up here that's going to bother me and push it down, right? So 115. So you have a 7, you have 3.5. That's 2 to 1. Good trade. Take it. That's it. Just that simple, okay? But you have to know the math. You have to put the work in to calculate and do your math. You can't be lazy mentally when you trade, okay? You have to put some kind of effort, all right? So I'm going to get off my soapbox, and I wish you guys a beautiful rest of the week, and trade smart. Put the effort in. Put the mental effort in. That's why mental capital, saving your mental capital, it's very important, as well as your monetary capital. All right, guys. Have a blessed weekend. Talk to you guys on Tuesday. Oh, well, on Monday I'll text, but I'm saying the video will be on Tuesday.